Today is Wednesday, April 3rd. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Digital assets have continued surging to print a fresh market capitalization high for this year at just under $177 billion. According to the CoinMarketCap website, the move came on the highest daily trading volume on record for cryptocurrencies. The cryptocurrency index CCI 30 surged past the 3,200 point level before retreating by approximately 100 points. The index has gained nearly 43% so far this year, with just under 20% already gained in April. The 30-day Bitcoin volatility index stood unchanged at 1.33% yesterday, despite the sharp rise. The index has been near this level for slightly more than a week now. The 24-hour traded volume indicator hit an all-time high at just under $90 billion today during the Asia trading hours. Volume eased back as the European session kicked off, but trading has remained extremely active, with the volume staying close to the $80 billion mark. The recent surge of Bitcoin has spilled over to altcoins, and the Crypto Kings dominance indicator has declined once again towards the 50% territory. The top 5 digital assets all show a sharp increase, and Litecoin has reclaimed the 4th spot by market cap. Bitcoin climbed above the key $5,000 mark, but it failed to hold the ground above this psychological level for now. Ether has retreated after surging above the $170 level. XRP has given up some of the earlier gains as well, and it trades at nearly 35 cents. Litecoin trades close to the $80 mark on a surge of 18% to reclaim its 4th spot by market cap. EOS is up by double digits as well to settle above the $5 price level. The Coin 360 heat map shows a green picture across the board. The markets have added to the previous gains, which is an encouraging sign for bulls. According to the Token Spread website, spreads have been lower than usual. The XMO exchange shows the biggest buy and sell side difference of just 0.11% for the Bitcoin dollar instrument. The XMO and Bitfinex exchanges have recorded the biggest intermarket spread of nearly 2.2%. We will now look at some of the characteristics of Populus, a global invoice trading platform built on the distributed ledger technology. The platform allows a global peer-to-peer invoice discounting. It allows companies to release funds that are locked in outstanding sale invoices by selling them at a discounted rate. Collection and release of payments is done autonomously by smart contracts, thus eliminating the need for a third party. All the invoices are recorded onto the Ethereum blockchain, increasing the safety of the data. The network utilizes the Populus platform token. The digital asset traded at nearly $70 in early 2018. As of today, the token can be purchased for less than $1.70. We will now review the performance of various cryptocurrency asset classes. We use data from the Messari website, which groups cryptocurrencies into 5 major categories. The infrastructure group is the top performer today, with a gain of 6%. The majority of the top assets are up by double digits today. The media and entertainment category shows an increase of 2.6%, as rises are not as significant in this group. The financial sector is up by close to 6%. Chainlink is the only asset that is trading in the red, and Olga's repo token posts a massive surge of more than 40%. The currency category has gained nearly 6%, as well as Litecoin is one of the top bullish drivers with a jump of 20%. And lastly, the service section stands just under 4% in the positive territory. Status is one of the most bullish assets here, with an increase of 14%. This is where the major cryptocurrency categories stand so far this Wednesday. We will now focus on most significant moves among the top 100 cryptocurrencies to identify the top gainers and, of course, the biggest decliners. We will start with the gainers. Bulls have remained in control of the cryptocurrency market. Olga's REP token leads the gainers section, and it has surged by a massive 47% over the past 24 hours as the token trades at nearly $25. Bitcoin Cash has jumped to trade close to the $250 price level on a daily increase of nearly 38%. The metaverse ETP coin has surged by 25% to approach the psychological level of $1. The bullish performance continues for Dogecoin, which has gained 23% on an elevated daily traded volume of close to $80 million. The project recently conducted a survey on Twitter on who should be the CEO of the project. Elon Musk leads the polls, and the famous entrepreneur even tweeted back that Dogecoin might be his favorite cryptocurrency. The Bitcoin SV jumped above the $80 mark on a daily gain of 21%. This follows a week of relative stability. We will now move on to the decliners. There are no significant declines as the majority of the digital assets are trading in the green. Ravencoin posted the top decline and it stands 7% in the red. The coin has been mostly trading sideways around the 6-cent price level during the past week. The Maker token has eased slightly lower after testing the $800 price level earlier in the session. The past week has been volatile for the Crypto.com token, and it is down by 1.5%. The Chainlink token has retreated slightly after trending up recently. The IO.ST token is down by less than 1% as the asset stabilized after breaking through the 1-cent price level. These were the top 24-hour moves during the European morning trading session this Wednesday. We will now join our crypto experts, Jason Fernandes, COO and co-founder of AE Token, and Kevin Mirko, CEO of Coin Metro Exchange. Hi guys, thank you so much for joining us today. How are you doing?
Hello, how are you? Great.
Good. Now we'll jump straight in. Bitcoin is currently having the $5,000 battle as bulls are pushing the markets even higher. We have previously discussed the significance of this technical price level. So what is your view on what we are seeing in the markets at the moment? Kevin, we'll start with you. What are your thoughts, please?
Sure. So yeah, Jason and I have actually talked about this quite extensively on many of recent shows as we battled around the 4,000 price level for quite some time. I think it's you can glean a lot of information on how assets react when they hit certain psychological levels or barriers in the market. 5,000 or just a 5 figure, multiples of 5, 0, 10, 15, 20, are always very tough psychological barriers. We've seen now, we've been, at least for the last probably 24, 36 hours, been playing around with this level. We've gone above the 5,000 level on certain price feeds. I've seen it on CoinMarketCap, though I've seen other price feeds that actually showed that the price stayed below 5,000. So regardless, we're probably somewhere slightly above to slightly below the level at any given time over the past, and we probably will continue for quite some time. What it shows me, though, is that there's always going to be a significant amount of sell pressure right below one of those psychological levels. And right above, there should be, if let's say bulls are truly in control, there should be a large amount of buying pressure as well as soon as it pushes through that level. We haven't seen that. So what we're seeing is a lot of sell pressure on both sides. We're seeing sell pressure below and sell pressure above, at least more sell pressure than buy pressure. So what that tells me is that while the market may have seen a nice bull push or bull run, as people like to say, over the last, well, we could say weeks, even if you want to look at the altcoin market. But when you look at Bitcoin, really, it's only been a few days now. The problem is that obviously, while the market outwardly is saying that it's bullish and that there's buying happening, players in the market are not buying as much as they're actually talking about buying. So unless we see a significant push up a few layers above 5,000, 5,200, 5,300 on up to 5,500. We can't say that the barrier has been broken yet. We definitely need a more true confirmation of, let's say, a daily close, a decent amount above 5,000. But I do think 4,000 took us some time to play around with. I would expect 5,000 to take some time as well.
Kevin, thank you for your insight here. Jason, what are your thoughts, please?
Yeah, I think one piece of good news is it's been above 5,000, somewhere around 5,020 for like the last 25 minutes. So that's one little piece of good news, and assuming hopefully it'll stay there, maybe pop up a little bit. But as I said on the 28th, of last month, I think basically that there was a lower Bitcoin dominance, and we've seen that in 2014 that basically preceded a major bull run, and so the high volumes that we were looking at and the way the numbers were trending upwards and you were experiencing lower highs and lower lows. It really sounded like Bitcoin was poised to break out. So I'm not really surprised that this happened. And I hope it'll continue. And I think it certainly showed a lot of momentum just over the last several hours. Even after there was some indication or rumors out that it was maybe a rumor that started the whole pump to 5,000. We didn't see the numbers really go down, and so that's a good sign.
Jason, thank you. Now, our crypto experts noted yesterday that the rally was sparked by a crypto whale purchasing large amounts of Bitcoin. Do you agree with this view, though? So, Kevin, what do you think?
Well, I think every time there's some type of bullish move in crypto, there's always some analyst or expert that comes out and talks about whales, or it's either the government selling, ill-gotten gains from Silk Road. That filled the news wires for quite some time when we initially started to see the bear market come into full swing. And so, look, there's ways to. Obviously, this is unlike any other market. You really can see in and outflows pretty easily on a blockchain, right? Because you can see how money changes hands between, let's say, individual players and then maybe cold or hot wallets of exchanges, and then et cetera, et cetera. So I think sometimes, though, because we have access to so much information, that people misconstrue what that information is. Obviously, many exchanges operate cold, hot, and let's say warm wallets that aren't visible to the public. They may be what they're looking at from maybe evidence of possible a whale could simply be one exchange clearing with another exchange. Most exchanges do actually trade between exchanges because when they need additional liquidity or simply to pad their book. So it could simply be some type of internal transaction. But having said that, and it kind of goes with this same argument, but just that Jason mentioned, I was going to kind of butt in, but I didn't want to do that. But he mentioned that Bitcoin dominance sometimes preceding or historically preceding a bull run. And on this, in this same light, I would say that what we've seen, we've definitely seen evidence of this, because we've seen money coming out of Bitcoin into the altcoin markets, into small caps, pushing up the market cap because obviously they're less liquid than Bitcoin. Now we probably will start seeing, as profit taking starts. We've already seen profit taking, but as profit taking starts on those small caps, that money is inevitably going to go back into the liquidity source, which is Bitcoin. So, and on that, there's also, obviously, you talked about record volumes, and I think maybe you'll bring up this in another question, so I don't want to touch too much on it. But record volumes today, we've been hearing about, the fact that these volumes are probably not real, 95%. There's been all kinds of percentage numbers thrown around. My point is just to say that I think that when I was looking today at Coinbase, actually, when 5,000 was broke on Coinbase and volumes died out. However, CoinMarketCap's volume indicator continued to surge. So just made me question the fact that perhaps, AIs run a lot of these wash trading. Wash trading bots are AIs, meaning when they see certain price points, they're going to start wash trading at a much more substantial level than they would if the 5,000 wasn't broken. Just something that rushed into my mind. On the whale question, I would say that I haven't seen any exact information to say that's true or not. But again, everybody has access to the same information. It just depends on how you read into it, basically.
Okay, so Kevin, not overly convinced there. Now, Jason, of course, same question to you. Thoughts on the idea of a crypto whale?
Agree, but not really for quite the same reasons. So like I've seen the report that they were basically 3 simultaneous buy orders of about 7,000 Bitcoin, so totaling about 20,000 Bitcoin, and basically that is supposedly the thing that sparked this whole upward pump. But the reason I don't quite think that that's accurate is that we heard earlier this year that some of the biggest Bitcoin wallets, so that's 100 largest wallets holding between 10,000 to 100,000 Bitcoin, and that excludes exchange wallets. Basically, the largest wallets accumulated over 150,000 Bitcoins in the last couple of months before the report came out, and that didn't quite move the market the way way this has. So it's highly unlikely that like 3 transactions of 7,000 Bitcoin are going to massively move the market when you have all these transactions totaling 150,000 Bitcoin, and we didn't really see an effect of that. So I don't quite agree with the suggestion that this was caused solely by one, basically 3 transactions that were really one transaction separated over 3 different transactions. I don't really buy that.
Okay, very interesting. Thank you both for your insight there. Now, Jason, we'll go straight to you. The surge was not followed by any widespread selling. Is this an encouraging sign? And at what level do you think we could see some profit taking? What are your thoughts, Jason?
So yes, absolutely, it's an encouraging sign. So there was these earlier rumors that I alluded to that it was an April Fool's joke, that somebody had said that the VanEck ETF had been approved, and then that's basically what it was, sort of like an April Fool's joke, and that led to the pump. But we know that wasn't the case, because even after it became widely known that this particular story was an April Fool's joke, the prices didn't drop, and in fact we see now it's at 5K. So normally, actually, to answer your question, normally I would say that traders would be taking money off the table at around 5K. But and I think we saw that happen briefly, because we saw it, drop down to like the upper 4900s. But right now we're just above the 5K level. So I think this time people might wait and watch and see if this momentum might push us to like 52 or 5300. And then, of course, after that, the 5500 would be the next number to look at.
Excellent, Jason. And Kevin, what are your thoughts, please?
Yeah, around the same lines. I think a lot of people seeing the 5,000 break are going to be a little overly optimistic, and rather than pulling profits off the table immediately, they probably are going to wait to see if there's any more extension to this pump before they pull any profits. So more than likely, you're going to see people hanging on a bit more, mainly because Bitcoin was stuck in a range for so long that pretty much any movement, especially this amount of movement where you start to see some volatility back in the market, I think most of these guys are risk takers, so they probably are going to hang on a bit more just to see if we break any more levels to the upside.
Okay, thank you, Kevin. Now, according to the CoinMarketCap website, trading activity reached a record high today, with a daily traded volume poking at $90 billion level. Is this a sign that we are seeing more cash flow into the markets? Where do you see the daily volume head once the full hype is back on the markets? What do we think? Jason, please.
So I think is a really important message. Because it's interest in the market. So if you look at when crypto was at its recent market cap, that was in January 2018. It was something like 768 billion. The 24-hour volume of trading at the time on that day was 70 billion. So you're talking on 768 billion. The volume, 24-hour trading was about 70 billion, about 10%. Right now, it's hovering at 77 billion, and that's on a market cap of 173 billion. And I think that's enormously significant. So I mean, yes, there are accusations, obviously, of there being the volume being manipulated, but the volume is always manipulated. So when there's like a delta and there's like some degree of change, we have to wonder why that is. And certainly the just monitoring the times when it changes, that's enough to know that there's something going on. So I think it's enormously significant, and I think that does mean that more money is moving into the market.
Thank you for your insight there, Jason. And Kevin, what are your thoughts, please?
Similar thoughts. One thing I would say, he's right that the volumes have always been manipulated, though I think as we progress, we're obviously getting more exchanges. There's actually more market players. There's more players to manipulate the market. So that delta may be changing over time. Jason's right to say that there's always a delta, but you have to remember, too, that most of the market manipulation is not done manually. It's done by algorithms. So there are algorithms that will wash trade and basically place orders in the book. When the actual number of placed orders increases, those algorithms more than likely will increase the amount of orders that they're placing in the book as well. So I think as volume grows, the delta grows with it. So, speculation of what that delta is, we could probably talk about that for a long time. But I do think that what you see today is probably because there's been so many extra orders as Bitcoin neared and then surpassed 5,000. That those same algorithms, those same AIs that generally push wash trading into the market, were probably pushing it at an exponential rate. So I would say that the percentage of volume we've seen today that's probably manipulated is probably much higher than what we've seen on lower volume days. Having said that, it still means there's more volume in the market. So regardless of the bad news side of this story, the good news is that there is more volume. We're getting crypto is getting mentioned again on CNN and BBC on the homepage. That's partially a big part of what fueled the initial, the last bubble through that ICO bubble and into the 20,000 for Bitcoin. So we're getting exposure. Exposure is great. So there's still good news, but I think you have to remember that there is an exponential kind of increase in this type of spoof or wash trading as the amount of transaction increases, legitimate transactions.
But it does sound there like there is light at the end of the tunnel. Now, Kevin, we're going to stick with you for the minute. Bitcoin dominance has eased back once again as rally transitions into altcoins. Is this a natural course of markets where an initial surge in Bitcoin is followed by flows into other assets as well, Kevin?
Yeah, I would say it's very natural. I mean, you have you're not really going to find a mature marketplace where one asset holds, 50% of all transaction volume and liquidity. That's unheard of, right? So for us to mature this market to a point where it actually can compete for market cap and everything else with every other major market, that's going to have to change. Meaning Bitcoin dominance will have to decrease. But for that to happen, obviously, we need other dominant assets. And I think we're getting to a point where we're starting to see some assets starting to show that maybe they can hold some dominance, whether that be your Ripple or your Stellar or some of these other tokens or coins that are built that are made to build payment infrastructures and things like this. And I think over time those will start to grow and acquire more dominance. So, I just talked about this in the fact that we've seen Bitcoin dominance fall. We've seen the money go into these small caps. Obviously, if your entire liquidity of your token is, I don't know, 1,000, 10,000th of Bitcoin, and you get a very small portion of Bitcoin that comes into your order flow, your price is going to increase, which increases the overall market cap of the market, but doesn't necessarily increase the size of the market. And at some point, most of that money came in through Bitcoin because it's where the liquidity is. So it goes back to Bitcoin at some point. So I think this ebb and flow, where we've called it on this show the altcoin season, when Bitcoin dominance falls, altcoins jump. We're going to see an ebb and flow where you're going to see Bitcoin dominance regain and maybe a stabilization of pricing on the altcoin market as a whole. And we'll probably see altcoin season happen again at some point when those PR cycles and hype cycles start to come back out. And people see that maybe, and especially for that actually to happen, we're going to have to see a bit of stifling of the Bitcoin price. If Bitcoin continues to surge, let's say in value, if it has another 3 or 4 days like this over the coming weeks, altcoin season will be on pause. That's for sure, because the majority of money may stay in Bitcoin unless there's a really good reason for them to jump out and jump into, let's say, some small cap outside of the main Bitcoin market. So it's definitely natural. It happens in every market. It's just that in most markets, one player isn't so dominant as it is right now for Bitcoin in the crypto markets.
Kevin, thank you. Now, Jason, as always, same question to you, please.
Yeah, so I think so. I think traders, are going to see this more and more. Traders are looking to maximize profits, right? So when Bitcoin is surging, of course, money moves there. When traders think Bitcoin is not likely to go up in the near future, they move money to altcoins to basically try to make some quick money. So I think a lot of people that were using this strategy are a little bit surprised by Bitcoin because most traders basically believe that the money was to be made in the altcoin market. And as Kevin pointed out, if Bitcoin keeps surging the way it's been, I think people are going to forget all about altcoins for a little while and basically put their money on Bitcoin. But I think the altcoins are all surging. So this is like good news all the way around, basically, because not only is Bitcoin surging, Bitcoin Cash is surging, Bitcoin SV is surging, and then several other altcoins are also surging. Everything's in the green. So it's not that it's not solely that Bitcoin's loss is altcoins gain or vice versa, because there's obviously quite a bit of new money coming in.
And now we'll finish this with a last question on a lighter note. So briefly, Dogecoin, which is on a bullish run, has recently caught the attention of Elon Musk on Twitter. All of the communication should obviously be taken extremely lightly, but does this still help the digital asset class to reach a wide audience? And could the most recent rally be fueled by this communication? So Kevin, what do you think briefly for us, please?
Sure. Look, like we talked about a million times, and I just mentioned, this market is still largely hype-based. Jason's mentioned the same thing many times on this show. So any type of hype into this market, anything that brings new eyes is a good thing. And obviously, Elon Musk is a bit of a joker, right? So the guy made a flamethrower. I mean, come on. I think he's kind of like the guy's guy. Every guy that likes tech looks at Elon Musk kind of like, the tech guy, right? So that's the kind of guy everybody wishes they were when they were in high school and wish they created PayPal and made a couple billion and could make cars and rocket ships and flamethrowers. So I think anything that he says, anything that someone like him says with that type of platform is going to put eyes on the crypto market. Let's just hope that when their eyes come on the crypto market, there's something good for them to see. Because if there is, yes, it helps for sure.
Okay, excellent. And can we have your thoughts, please, Jason?
So it's funny. I think we were just talking about several days ago about Elon Musk, because I think he made his first comment on Twitter regarding cryptocurrencies just, I think, like less than a month ago. And I think we were talking about it, and there was a question about whether it would have an effect on the crypto markets. And I pointed out that, he certainly has an effect on the stock market. I mean, that's the whole reason we had, the SEC went after him for those tweets. But the question was whether we weren't quite sure how much of an effect it would have on the crypto market. Well, it turns out that question has been asked and answered, because you see Dogecoin has pumped 30%, and I'm willing to bet pretty much all of that is due to Elon Musk, even jokingly saying that he thought it was a great cryptocurrency. So I think we talk about hype-driven market. I mean, wow, this is an exact example of it.
Now, thank you both so much for joining us today. It's been an absolute pleasure having you both on the line with us. Thank you.
Thank you.
Yeah.
Now, before we sign off, I have a last-minute update from our editorial staff regarding the crypto market. The total market capitalization has retreated slightly from the intraday high, but the majority of the assets are trading in the green. Trading remains active, and the 24-hour volume is just slightly below the $80 billion mark. The bullish performance has continued for Bitcoin Cash, and the asset is up by nearly 50%. The price of the coin is close to the $280 mark, pushing the total valuation to the $5 billion territory, making it the top 5th asset. As a result, EOS has been pushed to the 6th position. Well, that's all for this Wednesday's Crypto Now live show. We thank Jason Fernandes and Kevin Merko for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.